Okay, good morning. So this is going to be the first of a series of videos breaking down some trades that we were either in throughout the course of the week or some trades that we missed. Ultimately, the point of these trade breakdown videos is really emphasize setups over signals. And what I mean by that is, although the indicator will provide verified and validated signals, it's important to go about planning your trades out prior to, and you're solely just looking for signals to fall in line with the plan that you've put forth. That being said, let's take our attention to a trade from yesterday, April 12th, Friday, April 12th, that we called out. We did take a little bit off this, but we did miss the primary move as we weren't on the Zoom at that time. But the trade was on crude oil, and the trade idea actually begins on the 4-hour time frame. Several of us do trade London sessions, so the trade idea was developed during London session. And as you can see here, this was the trade idea here written on the right hand side, on the bottom right hand side at 2:21 in the morning, just prior to London kickoff at 3 a.m. The trade idea begins on the 4-hour time frame. As you can see here, we're stuck in a 4-hour range. This low here created this high. We would draw a fib from the low to the high, and this is the range that we're trading in. So at the time, at the start of London session, we were actually trading approximately near the 4-hour 61.8 bullish, right? So if we know, actually we were inside between the 4-hour 50% and the 4-hour 61.8. So that means we're inside the golden zone of a bullish fib, and it's a 4-hour fib. So I'm naturally at this point just looking for buys. Okay, so let's scale down to see what we were seeing at the time we actually begin taking trades at approximately 2 a.m. Eastern Standard Time during pre-London. So coming in quickly, I could quickly ascertain that we were in a bearish downtrend from a structural standpoint on the 15-minute time frame. And the reason for that is I quickly noticed that these were the lows that were put into the market here, right? So these lows were put into the market. I wanted to see where the highs were. So this was the high that put these lows in. So as long as we're trading below here, all right, below this high, on the 15-minute, we're in a downtrend. But again, understanding that I'm around the 61.8 bullish, I have a bullish bias. And additionally, there were some fundamental factors that contributed to my bias. For those that are tracking significant geopolitical things occurring and evolving, especially in the Middle East. And naturally, anything going down from a geopolitical standpoint in the Middle East is going to have some type of an impact on oil and oil prices. So given that that turmoil in the Middle East, I'm also looking to see oil climb essentially as a result. So that's also contributing to my bullish bias. So at 221, again, here on the right-hand side, we wrote the trade idea. If I'm looking for buys, I need to see a break of structure. So that break of structure simply means that I need to see the 15-minute close above what we deem to be the 15-minute protected high. So I need a 15-minute candle to close above this level here, right? And that will indicate to me that buyers are now interested in pushing price higher. Okay, so here we wrote that continuation buys are in play above Asia high, which is the blue dotted line. That will be a 15-minute break of structure, bullish break of structure there. So we're not looking to take any trades until we get above this 15-minute protected level. All right, so let us bar replay to see how this goes. All right, cool. All right, so now we've gotten our first candle to close above this 15-minute protected level. So at this point, I will shift this from a 15-minute protected sell, right, to a 15-minute break of structure, right? So now this is a 15-minute break of structure bullish. And I do this just for tracking purposes so I can visually see what's actually taking place on the market and have a reference point to refer to. So at this point, we've had this 15-minute break of structure, okay? Now I can decide to scale down to a lower time frame to now look for entries, okay? So if I'm looking at it here on the 5-minute chart, I can clearly see that we've been making higher low, higher high, higher low, higher high, higher low. And now with that 15-minute break of structure, we've since made a higher high on the 5-minute chart, right? So if we made a higher high on the 5-minute chart, if I'm looking to get in this now, right, and I'm not looking to wait and maybe until later on, I would then go about making a fib from the low to the high, and now I'm waiting for price to pull back to at least 50%. All right. Okay, we get a flush down. Okay, we've now touched 50. We've also noticed rejected off the 5-minute 50 EMA, which is the orange line. And look, we get a B signal. Okay, I typically like to take the second signal, right? I'm looking for 2 signals around a key level, and the key level here being Asia high. So this is now constitutes a break and retest of Asia high, right? So you can get in off this signal, or you can wait for a second signal. In this case, the second signal comes, cool. And you get in at the close of this candle. Again, if we're trading fibs, then your first target may be this extension, right? The -27 extension, okay? And for stop losses, you're good anywhere below the candle that created it, right? More or less. So let's say this is your first target here, okay? That extension. Cool, we go straight to the extension, right? So that's a pretty much just over a 1-to-1 in terms of risk to reward there. But notice this was pretty quick, right? And we do know that New York session hasn't come online. So if I'm a betting man, more than likely, if I'm taking a look at this on the 15-minute time frame, this wasn't actually the real breakout and pull back into this, right? So what we were able to take on the 5-minute chart was simply just a quick little scalp, right? And we can quickly see that that was the case, right? So now we pull back into this level. But now that we've broken structure, it's the same concept here on the 15-minute time frame, right? We could do a fib from the high to the low, right? And we're looking for price to come back to about 50%. All right. In this instance, we don't. We only come to the 38.2. Let's take a look at it again on the 5-minute chart. So you have to make a decision at this point, right? You have to make a decision on whether or not you want to take it off of the 38.2 or you want to take it, risk missing the trade and hoping that price comes back actually down to the 50%. Well, how do you make that decision? Well, for one, you have a B signal here. So price is clearly telling you it possibly wants to go up. Let's remove the original trade idea, trade. Secondly, notice that this is an actual break and retest of Asia high. So we are pushing away from a key level, right? So this is worth putting a trade on. It's worth putting some risk on. Additionally, we're rejecting that 15-minute key protected level, which is now that 15-minute break of structure level. And then lastly, I know I mentioned this on the stream yesterday when it comes to hidden divergence. So hidden divergence is a trend continuation sign. So notice here, those 2 pivots, right? We are making, it's moving at a upward incline, right? And I'll use a line instead, right? We're moving at an upward incline. But now if I look at the corresponding points on the RSI, notice on the RSI, we're moving at a declining slope. This divergence suggests a bullish continuation, right? So knowing that I'm at a key level, I just had a break and retest, right, at a key level, right, of Asia high. I'm rejecting the 15-minute protected, right, that we shifted back bullish. I've just pushed off of the 4-hour 61.8 bullish, right, pushing past, just ever so past the 4-hour 50% bullish, right? So we're heading in the correct direction from a higher time frame standpoint. I'd say this is worth getting in, irregardless that we haven't pulled back to 50%. I'd put my stop loss somewhere below the low of this candle. Maybe I put it just below 50% in case they want to send a wick down to verify, just sending it back to equilibrium. And my first targets would start being the negative 27 extension and the negative 61.8. But again, this is a intraday entry because this is off of a intraday fib. However, bear in mind that we are clearly moving in the direction of the higher time frame fib. So if we know that we're moving in the direction of the higher time frame fib, this target may be limiting. We need to scale up potentially to see what are our higher time frame targets. If this is the daily if this is the 4-hour 38.2 and we actually fulfill the extensions here, then our next target should in theory be the 4-hour 0%, right? So in this instance, if we would have taken this trade, right, and actually targeted and been able to hold our trade for the longest, right, to target the actual level, notice this would have been a 1 to 8 trade. And just for the sake of, we'll do it on the 15-minute chart. Okay. Oh, excuse me. It didn't actually go to the oh no, the 0% was right here. Apologies. So it was a 1 to 5. Perfect. So it went all the way to the 4-hour 0%, and as you can see, it's right here. Back to the fib, original fib range that we had, right? So the low that created this high, and we pushed up to the 0% 4-hour, it failed to break, and immediately had a reaction to the downside. But it's just to show you, that's how you play your targets, right? I'm intraday looking to target the negative 27 extension in the 61.8. Once I see that we're continuing to push, naturally, I scale up to see what is my higher time frame target. Well, if I'm pushing from a 4-hour fib, going from the 61.8 to the 50% to the 38.2, once I'm seeing that I have bullish pressure, I need to continue to target the 0%, right? What is the logical next target? And that's one of the things that moving forward, we're definitely going to tighten up and just continue trying to squeeze out as much of the trade as possible, because this right here was a banger. If you took this B trade and actually targeted that 0%, this was 5 times your risk. So that's crude oil for April 12th in a nutshell.